Okay, so my name is Mark. I will be talking about Colu, which is doing local currencies. I believe we're the biggest blockchain company in Israel currently. And the company, I will focus more in this presentation on how we started, how do we leverage the blockchain, how do we reach local currencies, and what we learned so far. We started 2 years ago, and back then it was a bit before the blockchain hype or the blockchain buzz. We asked ourselves, we call ourselves a Bitcoin 2.0 company. I see already there's a blockchain 2.0, blockchain 3.0. So back then there was a start of expressing this need for, okay, people saw, look, there's a protocol, it holds a bounty that is currently $13 billion on a decentralized ledger, on a public ledger, a decentralized protocol. Nobody really holds the money. If I just break the protocol, this is a bounty I can claim. Last year, some guys did that with the DAO, so Bitcoin is a good target. So over the last 8 years, Bitcoin was not hacked. Like the protocol itself was never hacked. And also, we tried to understand how do we apply it to financial markets, to the business problems that we have to solve. So we try to ask ourselves, how do we create an open source protocol for money? And people did the analogy before me today that the blockchain is a bit like the internet, or the evolution of the internet technology. So we try to understand, okay, right now it feels a bit like building something with blockchain technology is like building websites in the 90s. So how do we solve this chicken and the egg problem? Also, how do we represent physical value on the blockchain? So Bitcoin is a pure digital asset, pure digital value. How do we apply it for traditional banking? And also, if Bitcoin is the TCP/IP layer, and if we can say that the internet has the TCP/IP, the HTTP, the HTML, the browser, so there's a whole software stack that took decades to build. How or who exactly is building this software stack that goes on top of the blockchain? So with that questions, we decided to tackle developers first. We created an open source protocol that's called colored coins. It's basically a way for us to solve the chicken and the egg problem. So what we do basically is take the Bitcoin blockchain, which is a single asset blockchain. It holds one asset called Bitcoin. We wanted to convert it to a multi-asset blockchain and effectively renting security services from the Bitcoin blockchain by paying miner fees. So Colored Coins protocol is an open source community. We launched the protocol, and using that protocol, we created a dashboard that basically removed all technical barriers for developers. We said, focus on the problem, focus on building your blockchain apps. Don't hold Bitcoins or don't have any cryptographic knowledge. We wanted to see what people are building. And the dashboard gained a lot of traction. We saw people from about 100 different countries issuing different types of assets. It's a really easy platform to use, and it exposes a sort of an API. So you issue an asset, and then you can customize your wallet to it and build stuff on top of that. And it was, for us, just a good sandbox to see what people are building. So we saw really an organic traction. We didn't promote it like it's our main product. We just saw people coming. If Venezuela had the demonetization, we saw people from Venezuela talking about let's issue a local currency. And India demonetized a few months ago 80 or 90% of its currency. They removed the 100 rupee bill. So we saw people coming from India. So 100 different countries. And the interesting thing is many of them really expressed the same ideas. We saw that most of the use cases are really currency related, even though we saw all types of companies and use cases, IoT and properties on the blockchain, and Intel building stuff, and Wells Fargo. So it was a good way for us to interact with developers and understand what's the lowest hanging fruit. For us, it was currencies. Another thing we learned that scalability is a pain. Eden mentioned the Lightning Network, so this is a big focus of ours. And another aspect that we not only see as imperative, but we also see our advantage is bringing this technology as fast as we can to end users, because that's the only way to really test it. So the whole idea of Bitcoin is taking an open source ledger and basically combine decentralization, cryptography, and basically bringing all the participants to use your ledger. So the only way to actually battle test it, the only way to provide an answer on the question, what is the risk, is by providing users with the private key and actually test it on the ground with real users. So this is what we decided to do. So today, Colu is 35 employees. We raised $12 million so far from Aleph also. The company decided to take this technology to end users and not wait for a bank. We try to find a use case for local currencies that we can actually apply ourselves with people on the ground without any municipality or a bank or any partner. Just go on the street ourselves with this technology and introducing the local currencies. So today we have a mobile app that we're operating in 3 communities, 2 in Israel, 1 in Jaffa, and 1 in Florentine, in Tel Aviv. And the third one is in Liverpool, and we're starting another community in London soon, and another one in Israel. So we'll have 5. The local currency is attached 1-to-1 to shekels, so it's not a new monetary policy. It's the same currency you use every day. The only difference is that you basically topping up your wallet account with money from your credit card or from your bank account, and you're basically buying those Florentine shekels or Liverpool pounds and receive a token that represents those, basically get a blockchain-based asset in your wallet. And the idea was to create the closest digital equivalent of physical cash. So you're actually holding cryptocurrency that represents those shekels, those pounds in your wallet. And first of all, we provide a mobile commerce solution for SMBs. There is a very high barrier of entrance for SMBs. There are no mobile commerce solutions for independent businesses, for small businesses. So our focus was really capture this audience, capture independent businesses in the local community, and also provide consumers with a really frictionless social payment system where in America you have Venmo, you can transfer money for free. In Israel, you're starting to have Bit and stuff that Bank Hapoalim released and Paybox, but you don't have something without, this is really frictionless. The idea is that once I bought this cryptocurrency, once I have Florentine shekels in my pocket, I'm in a no-fee zone. I don't need to pay fees, and the most important part, I don't need to wait for settlement. So a business can accept this currency and right away pay with this currency at another business, so we can create kind of a B2B barter system. And not until the merchant needs to take money out of the system, so convert the cryptocurrency back to regular shekels, it doesn't need to pay fees. And when it does this action of pulling out money, it still pays less money than Visa. So we're lowering transaction cost for merchants by bypassing Visa and MasterCard. And we provide a new financial service for consumers that is really local. So the idea that your whole community has this currency, and you can start to see very interesting stuff happening. And a very big part of our business plan, a very big part of the product is the idea that once we encourage local spending, there is more money that stays inside the community. So there are actually researchers to back this app. We know that when you pay to an independent businesses, more money stays in the community than when you pay to a multinational company. So Colu basically created this sort of a toolkit for building a local currency with a special POS system, with merchant tools for merchants, and with the wallet. And the nice thing about one of the encouraging things about our product is the fact that merchants had no problem adopting it. Independent businesses has no problem making transaction to a special POS system that we provide for them. And the fact that we are in charge of the entire payment flow makes us really creative with providing a really good payment experience. So if you compare it, for instance, to Apple Pay works mainly with multinational companies or big POSs, like you'll see it in America, mostly in McDonald's and places like that. With the local currency, you see it on every shop on your street, every grocery store, every barber shop. So this makes the currency really tangible when you see how much money you have and you can see where you can spend it. So how we did so far? Those numbers are a bit outdated. We have 300 merchants and 10,000 consumers. Currently, we give a little incentive for loading money into the system, kind of a market education plan we have, better than invested it in ads. We just give people some money and tell them, go down and buy something at the grocery store using this currency. For businesses, it's really a good thing because it lowers transaction fees for them. And we also see changes in consumption patterns because we see more people that are sending money, neighbors settling between themselves, people that can suddenly put a QR code on their Facebook page and get people sending them money online. We see B2B barterings. We're trying to help that happen, but the idea is that the pub can pay to a beer manufacturer and settle using the Pishpe shekel or the Florentine shekel and not really go through the banking system. And also we see high consumer and merchant engagement. In the future, we would want the merchants to actually engage themselves, the consumers. But right now, we're already spotting like behavioral interesting stuff where people load the money and go on a daily routine of buying their favorite coffee at their favorite coffee shop. So this is a really good way to encourage that and a really good tool for businesses. So how do we take this model and apply it to the blockchain future that Colu envisions and the blockchain future that we research? So first of all, our product and most of our resources go into the local currency product, and the effort there is to really educate the market about digital currencies, create traction. Our second effort, our second vector, is taking our entire infrastructure, the entire way on the back end that we are using internally to issue those currencies on the blockchain, open source it, and create this sort of an open source framework for digital currencies issuance. So as I said before, there's this blockchain software stack. Most of the industry right now is really focused on the blockchain level. And you heard some talks today about Hyperledger. Colu, by the way, is also a part of Hyperledger. We're researching it a lot. Multi-chain is also very interesting. They all really focus on questions of what is the security mechanism, what is the consensus model, what is the governance model of this ledger. We said, we don't really care. We don't want to build a ledger. We're agnostic to all that. We want to focus on the layer that goes on top of a blockchain, which is purely agnostic, and it solves questions like, what is the scalability? How can it outperform existing solutions like Visa in terms of transactions per second? How do we reduce risk for banking in general? How do we reduce custodial risk? How do we create APIs for this? How can we reduce the systemic risk in the system? So coloredcoins.org is our major open source effort, and we're onboarding players to be part of it. The idea that this will be a framework for digital currencies that really shows a critical mass of adoption for this layer 2 solution, for this payment layer. And already we see very nice traction with that, and we need to build an ecosystem. Like a wallet is not enough to power a community. We need exchanges and payroll apps and merchant apps and hardware wallets and industry standards in order to really power an economy with digital currency. So the first effort is really create this unified front and standardization around the second layer. Another big aspect is the fact that today we understand that we won't hold the entire human knowledge on one ledger. We'll probably have different ledgers for different use cases and jurisdictions. And the fact that this layer should be able to settle different assets on different blockchains is a very important effort of ours, the idea that we basically connect different blockchains together. And I'll talk a bit about it more in a second. Another important part is efficient and scalable payment infrastructure. So Eden talked about the Lightning protocol. We created a demo that actually uses Lightning protocol, and already now it allows us to create transactions that have zero verification time, as opposed to Bitcoin, which takes at least 10 minutes. It has almost no fees. It reduces the amount of fees because you don't need to pay transaction every time you go and buy milk. You only do it once when you open an account. And the third thing is TPS, transaction per second. Currently, Bitcoin has really a bottleneck of transactions per second. You can do only 7 transactions on the Bitcoin blockchain per second. So Lightning Network, because of its distributed nature, makes it unlimited amount of TPS. You basically verify your transaction P2P, Lightning Hub to Lightning Hub, and then you reach a limitless amount of TPS. So there's no limit of the scalability that it could achieve. Another important part is the custodial risk. The idea is to introduce more players into the banking system, more local custodians, more local banks or new types of banks. And once you do that, you also need to evaluate the risk. One of the important things that this technology allows is absolutely no custodial risk for the local issuer. So if I'm hacking Colu right now, I can't really steal any money because the money is stored on the user's phone. Colu can't really do anything on behalf of the user. So it's a much better model in terms of reducing systemic risk into the system. So we can introduce more participants to the banking system without increasing the risk, definitely from the hacking perspective. Another important aspect is you create a network of thousands, hundreds and thousands of issuers. They're all using a ledger to settle between themselves. Suddenly, it doesn't really matter if you move $1 or $1 million, the fee stays the same. So remittance suddenly becomes like sort of a byproduct of just doing stuff on a public ledger. And another very important aspect is interoperability, the fact that everything is open source and there's a collaboration between many countries and companies, and someone builds an ATM in India, I can use it in Israel, and somebody builds an exchange in Israel, I can use it in Japan. The idea that there's standardization around how we move money suddenly opens it up to a lot of participants. They can also join and contribute to the development, and of course this makes it grow exponentially. So Barbados Dollar. This is a very interesting company that we cooperate with. It's called BIT in Barbados. Barbados is an island in the Caribbean, one of 20 islands in the area. They have approximately 20 million citizens in the Caribbean area with almost no local banking. So except Cuba, it's kind of a Western area that has almost no local banking. Most of the banks there are global. In the island of Barbados specifically, 50% of the island has no bank accounts. So cops on the island actually get money in cash. And they do have their own central bank. So this company, BIT, raised $40 million. It's actually the second company ever to raise money, the second startup ever in the Caribbean area. So a lot of eyes on that startup. And this startup, what it does is issues a local currency called Barbadian dollar, which is a legal tender approved by their central government. And this is an amazing testbed for us because everything they're doing in terms of issuance is being done on our platform, on the Colored Coins platform, fully open sourced. So the BIT currency should be extended to the entire Caribbean area. But what you see here is an app that they built themselves for their customers. Everything on the back end is developed in open source. So I think this is the real paradigm shift here, the fact that fintech usually is about improving the user experience. Blockchain is all about replacing the plumbing, replacing the infrastructure. So as long as we see this trend of many companies doing on the back end stuff in the same way and sharing their code and sharing their standards, we will see slowly governments joining, and we will see digital currency will become a reality really soon. I think this is Colu's relative advantage, where we have one leg in the protocol side and one leg on the consumer side, and we're in a good position to bridge them, because this is what this technology is all about, the idea that we give you more power over the digital asset you possess and use every day. Questions? Thank you. Way ahead of you. Yeah, so first of all, the first community we started 4 months ago, so it's really, really new. We're currently, bringing operation people, and right now, if you go to a lot of places in Florentine and Jaffa, you will see those brochures. Soon you will see them in Liverpool if somebody visits. But yeah, that's something we're definitely focused on. But even today, if you go on Florentine Street, notice next time almost every door has we accept Colu sticker. So we have about 300 merchants really starting to feel like a real currency, even though it's very, very local. Yeah?
The currency is anyway tied to the fiat currency. What's the need for having 2 different currencies inside Tel Aviv?
I don't believe that in the long term we'll have 2 currencies in Tel Aviv. We'll probably have 1, but we needed to start somewhere. I live in Florentine, so... No, the idea is to combine them in the future. But again, we needed to build a good product. We needed to bring it to users and get actionable data. So we needed to start somewhere. So we started really, really local. Probably our currencies will be city-based. So it will be London pound, Liverpool pound, Haifa pound, Tel Aviv pound. Sorry, Haifa shekel, Tel Aviv shekel. There won't be this duplicity. Yeah? So I believe that what Colu is doing, so the blockchain hype is about 2 years old. If we look at central banks talking about putting digital currency on the blockchain, it's a 1-year-old discussion that really started to be serious. And for the last year, we actually see political pressure for it to happen. I think what we're doing aligns perfectly with this trend. We see consortiums in Russia, Japan, England. Central banks really, really, really need to start moving people to a cashless society, and not only because they really want to encourage local spending, but they actually need more tools in their arsenal in terms of monetary policy. So central banks, I believe, will regulate those entities. This is a technology that allows central banks to replace the security features you have on bills, on paper, secure it with math. The idea that I can audit instantaneously thousands of local custodians and increase the amount of players in this. I thought it's a get off the stage bell. Okay. So in terms of regulation, the whole idea is to connect with the central banks, and I'm not really concerned about Visa and about. I don't have a problem with them buying us, but I'm not really concerned that they are able to come up with something better, because Visa is a technology from the 50s that uses pool payments. And right now, everybody has a number in their pocket that everybody can look at and steal the money. So it's a pull-based system. Bitcoin is a push-based system. So instead of an acquiring bank with Visa and an issuing bank with Visa and the payment switch and Shva and all the intermediaries in the middle that cut a fee, you basically replace it with two sides. One is sending, one is receiving, and that's it. The trade is the settlement. The transaction is the settlement. So no post-settlement, no complexity in settling the money, and the fee model is totally different. So just one thought about central banks. It looks, the Central Bank of England released a paper half a year ago about what will a digital currency will do to an economy. The leading economist created a model where it took 30% of the GDP and replaced it with digital cash. And effectively, overnight, there is a rise of 3% in GDP just by cutting interest rates, cutting complexity, and cutting intermediaries. So this is only an economical model. The reality is much more complex, but this is a trend that we're seeing, and I believe in 5 years we'll start actually using a shared ledger-based digital currency. I don't know if they'll still call it a blockchain, but yeah.
First of all, I'm an advocate of the digital currency perspective, but from a pure economics point of view, we have a lot of microcurrencies like Haifa, currency to Aviv, etc. Do you get to a point where you hinder economic growth? Because what happens to look at a chain, a store chain. If you have a lot of economic incentive in Haifa to use a local store chain, a lot of economic incentive in Deloitte to use a local store chain, then one central store chain won't be able to grow in scale and promise lower prices to consumers. So isn't there like a point where microcurrencies start to hinder economic activity?
So first of all, there's an economical theory that says that competition between currencies is a good thing. But so I don't think that's a problem, too many currencies. But I think what we're talking about right now, which is fiat, basically, money that is issued by countries and how to regulate it, it's a very specific vertical. It's a very specific vertical, and it focuses on the narrow perception of money. There is a wide perception of money. Like narrow money is the bills and coins. The wide perception of money is basically in the future we can all pay for stuff with Amazon coins or Google coins or IMF-issued coins. So I believe that this technology will allow more types of money in the system. Right now, what Colu is doing is just doing a bit shekel, bit ruble, bit pound. We're not really taking it to its full potential, which I'm sure of, after the horizon we will start seeing those models also.
Yes, but when you look at the United States and Europe, for example.
Keep it short. We've got one question in the back, and then we're going to break. Okay?
When you look at the United States and Europe, for example, when they centralized the currencies, like the United States had like their origin multiple currencies, and Europe also a lot of different currencies, and they centralized it. That's when they saw benefits.
So again, the central bank, right now in America, you have $4,000. I don't know if anybody heard about that number, but there are $4,000 in physical cash on every head in America. So it sounds a bit too much. Like people don't usually hold this kind of money at home. So this number represents illegal drugs, money laundering, illegal activity. So the central bank wants to eliminate this, and it wouldn't be decentralized as you think. But also, you won't manage your money at the central bank. The idea is that the central bank is the regulator, and he will regulate a national ledger of banks, and the currency will live on a shared ledger and not siloed in each balance sheet of each individual bank. So this is the effort here.
Last question up in the back.
Yes. At the beginning, like one of the it seemed to me like the case of burgers, you know, like this small town which had a local currency during the Second World War, and like this total system kind of helped them to get over the recession or something. My question is like, but it's like a one-way system. Like you exchange your currency, and then you have the
Yeah, so we modeled our product on local currencies that already exist in Europe specifically. There are many examples of actually successful local currencies. They are local, so not a lot of people hearing about it. Brixton Pound, we have the Weir franc. It's a local currency that is issued by a bank in Switzerland that is since the 40s has proven to actually has this supporting effect when there's recession. The idea is that all those local currencies are paper-based. We wanted to create a digital version, and also we wanted to create a special toolbox that you can actually implement it community at a time. And the idea is that all of those currencies, all of those local custodians, local issuers, it could be credit unions that give loans. Many of those local currencies give loans also. This is a very important part of our plans. They'll all be interchangeable. But they will be interchangeable in the way that the exchange is transparent behind the scenes. This is some of the things we can achieve with this technology. When? I don't know.
Mark, thank you very much.